Thank you. I just switched sections here. Thank you, Elvira. That was a great presentation. Thank you everyone for joining. My name is Jeannie Melendez. I am a relationship manager with Mass Housing. I know that I'm not sharing right now, but for some reason my screen was not acting right. So here we go. The programs that I talked to you about today are available in every city, every town with Mass Housing. Do you guys see the presentation, or is it like a split screen?
Split
It
screen.
looks like a split screen, yeah.
Yeah, this is not working for me. Let me try and figure this out one more time. We are a sister agency with Mass Housing. So they're two separate agencies. Mass Housing Partnership and Mass Housing are two separate agencies. The programs that we talked to you about today cannot be combined with Mass Housing Partnership. They have their great, amazing programs, and we have amazing programs, and maybe one of them will work for you. And this is what you're trying to learn about today. You guys are seeing one screen right now, right? I'm gonna take that as a yes.
It's still full, but it's okay. We can see the main screen is larger. The main presentation is larger.
Okay, good. Okay, so Mass Housing is a quasi-state agency established in 1966. This year will be 60 years old in September. We're super excited about that. We assist low and moderate income first-time homebuyers in the state of Massachusetts. The programs that I talked to you about today are available in every city, every county, every town in the state of Massachusetts only. We offer fixed interest rate mortgages, low down payment options, as well as a job loss protection insurance that comes to you at no extra cost. And I'll talk to you a little bit about that as we move along. When you work with Mass Housing, you're actually going to be working with one of our approved lenders. Across the state, we have about 95 lenders that are approved by Mass Housing to offer the programs that we will be sharing today. They're the ones who are going to guide you through the mortgage process. Once you become a homeowner, Mass Housing then buys your loan from that lender, and we become your servicer. So your mortgage payments, any questions that you have, you're going to call and direct them to Mass Housing. To determine your eligibility for Mass Housing, we have different products based on different incomes as well as locations. And a lot of the programs that we talk about today, and I know it was a question in the chat box, it's going to be based on your gross income. You're going to reach out to one of the participating lenders and speak to that loan officer. That loan officer is going to assess your income. They're going to collect your income documents, whether you're self-employed, whether you're W-2'd, all of those documents are going to be necessary. Your location preference, where you're looking to buy, what type of property you're looking to buy, because you're purchasing a single family, a two family, a condo. Some of those properties will have different requirements, and any other qualifying factors to hopefully find the best Mass Housing loan for you. But we do have general requirements in a lot of these programs too. Our first general requirement, you have to be a first-time home buyer. And Elvira explained it earlier. That means that you have not owned a property in the prior 3 years. You have to complete your first-time home buyer certification. You're not almost there as it states in this presentation. Maybe you have completed your education. If you haven't, Financial Education Associates does the first-time home buyer classes, so you may sign up for one of those. If you're purchasing a multi-family home, where you're living in one unit and renting out a unit, where you become a landlord, you need landlord education. And that education is going to provide you a lot of information as you become a landlord, because there are other rules and guidelines that you should know about that. You have to own or occupy your property with a Mass Housing loan. That means that you purchase your property, you're the owner, you're going to live in it. You're going to live in it for as long as you have a Mass Housing loan. And then meet any other qualification guidelines. We know that income is going to be one of those. Your credit score is another one. And anything else that is specific to your situation is what you would have to make sure that you meet. And you're going to discuss that with the lender that you work with. Mass Housing has down payment assistance programs. The down payment assistance can be used towards the down payment, the closing costs, single MI premiums, or even to reduce the rate. The lender that you work with will guide you through the best use of that money, and then you make that decision. Maybe you do have some money saved, and you'll use our down payment assistance for just the down payment. Maybe you can use some of it for the down payment and some of it for closing costs. So the lender that you work with will guide you through that. We have different options depending on your income. If you don't qualify for one, you will definitely, or not definitely, you will look at the next one and see if we qualify for that one. One thing that I want to make sure that you are aware that the down payment assistance loans that Mass Housing offers can be combined with other community down payment programs. And these are going to be community down payment programs such as Federal Home Loan Bank. They have the Equity Builder and other two programs that are available. Any city or grant programs, and Denisha kind of shared a list of some of the city programs that are out there. You can do your own research. You can Google down payment assistance in the city of Revere, for example. They just announced a new program. And those are the things that you could potentially combine with Mass Housing. You cannot combine Mass Housing Partnership and Mass Housing. Those are two separate agencies, but you can combine other programs and talk to your loan officer about that because they'll have an idea of what you'll be able to combine with the down payment assistance. Mass Housing has right now 3 down payment assistance programs that are available to you. We'll go over them. The Workforce Advantage is available to borrowers whose household income is at or below 60% of the area median income. This program is going to be very specific to the county that you're purchasing in, the number of people in your household, and then even within the county, what city or town you're looking to purchase in. This program is offered as a second mortgage. It is a 0% interest deferred loan. So I want to break that down a little bit. The deferred loan part means that you don't make monthly payments on this. The 0% interest means that when you do pay this back, you don't pay it back with any additional interest. You borrow $30,000, you pay back $30,000. So when do you pay it back? You pay it back when you refinance your home, sell your home, refinance it, or pay off your first mortgage. If you sell your home, it can come from the proceeds of the sale. If you refinance, you can refinance this into a new first mortgage because maybe rates went down and you could take advantage of a lower payment. And if you pay your mortgage off in full, then this money would become due. The Mass Housing Mortgage Program is available in 2 options. It's available to borrowers earning less than 80% of the area median income or above 80% of the area median income, depending up to 135% of the area median income. This is a second mortgage that's offered as a 15-year fixed rate mortgage at either a 2 or 3% interest rate. You do make monthly payments on this mortgage along with your main mortgage, your primary mortgage. At 2%, $25,000 for 15 years, that is about $168. At 3%, it's about $172. If you sell or refinance the home, whatever balance is outstanding at that time would have to be paid back. All of our down payment assistance, again, as a reminder, is available statewide for all first-time homebuyers who are purchasing a 1 to 4 unit property, including condominiums and planned unit developments. I mentioned earlier that we had a mortgage payment protection insurance that comes with our conventional loans. This is included with the mortgage insurance that's provided by Mass Housing. It comes at no additional cost to you, and you don't have to pay it back if you use this. So what happens if you become unemployed and start collecting unemployment benefits? Mass Housing is able to cover the principal and interest portion of your mortgage for up to 6 months for up to $4,000 per month. You can use this for any 6 months. You don't have to use it all at once. Maybe you only need 3 months because you found a job and can continue making your mortgage payments. This is available during the first 10 years of the mortgage, and the benefit becomes active once you've made your first 6 months of mortgage payments. We've been able to help a lot of people in the state of Massachusetts remain in their homes with this particular insurance. It's a great benefit with our conventional loans. So let's talk about our conventional mortgages, because when you work with Mass Housing, you're actually applying for 2 mortgages, your main primary mortgage and then your down payment assistance mortgage. The lender that you work with will submit an application for both. We'll go over the conventional mortgage programs that are available to you. These go hand in hand with the down payment assistance. So the Workforce Advantage goes down hand in hand with the Workforce Advantage Down Payment Assistance Program. This one's available to borrowers whose household income is less than 60% of the area median income. If you're eligible for this program based on your income, gross income, in the location that you're purchasing in, then you're eligible for the $30,000 as a 0% deferred loan. There is no mortgage insurance cost to you with this. So there's no MI. This is actually paid for by Mass Housing, but you do get the MI Plus payment protection benefit. To give you an example of the income limits, and this is a condensed table on this presentation that Denisha will share with you later at the end, you'll find the up-to-date as of June 15th, 2026 tables for all of our programs. But to give you an idea, if you're purchasing in Suffolk County and you're a household of one, 60% of the area median income is $72,000. Again, it's gross income. And this one's going to be specific because as you go along, there's going to be income limits for 2 people, 3 people, 4 people in the household, and so on. Okay. And then this is going to be the income based on where you're purchasing. And as a reminder, gross income. If you exceed the income limits for this particular program in the area that you're looking to buy, then we look at the Mass Housing Mortgage Program. The Mass Housing Mortgage Program is available to borrowers earning up to 135% of the area median income. This calculation is going to be based on borrower income and not household income. So whoever's going to be on the application, that's the income that we'll use to determine the eligibility for this program. If you're eligible for the $25,000 at either a 2 or 3% interest rate. The MI Plus payment protection benefit is available. This program does have mortgage insurance, but it's usually a bit cheaper for first-time home buyers as well as where you're looking to buy. The income limits for this program, a lot easier to determine. You're either under 80% or you're over 80 to a maximum of 135. Let's take Suffolk County for an example. If you're under 80%, you would be making less than $124,000. Again, this is going to be based on borrower income. So if it's one person, then your income cannot exceed that limit. If it's 2 people, then we add the income together for both people and they cannot exceed that limit. If you exceed the limit, then we look at the 135% option, which takes you all the way up to $209,250 to be eligible for the down payment assistance for the programs that we have. So you can see that the programs have varying income limits, but again, great opportunity to be able to get the down payment assistance that you would need to purchase a home in the state of Massachusetts. We also have FHA programs with the same income limits. There's only a couple of differences when we do FHA. And the lender that you work with, if they offer FHA and you may be eligible for an FHA product versus a conventional product, they'll discuss the different options available to you also. But with the Workforce Advantage FHA, same as the Workforce Advantage conventional, the main difference is the mortgage insurance. FHA products will always have mortgage insurance. And in this case, the mortgage insurance is not paid for by Mass Housing, and the FHA insurance would apply. And because FHA has their own mortgage insurance fund, you do not have the unemployment payment protection with the FHA products. So the lenders that you work with will help you decide on which may be the better option for you, whether conventional or FHA. And if it's only FHA, they may guide you to figuring out how do you become a conventional borrower. We also have the FHA product up to 135% of the area median income. That's the first-time home buyer FHA program, similar to the Mass Housing first-time home buyer program. Again, the main difference is going to be the MI Plus payment protection benefit, the unemployment payment protection, and the mortgage insurance with FHA. All of the information that I covered, you'll be able to get through the QR code that you have here, where you can find your lender. We have an eligibility check on our website, all of our down payment assistance programs, mortgage insurance. We also have programs once you become a homeowner. So we have some loans for homeowners as well as the Energy Saver Home Loan Program. But more importantly, signing up for our newsletter. Our newsletter is full of tips and suggestions for first-time home buyers. And if we have any changes in income limits or any new programs, we would announce it through our newsletter and you'd be the first ones to know. So when you have a moment, when you have a moment, please take the time to look through our website that you'll be able to find all of this information that we just covered. Additionally, we have a whole team that's available to assist you throughout your home buying process. We're available Monday through Friday, 9 a.m. to 5 p.m. You can reach us at 888-843-6432, or you can give us or you can send us an email at homeownership@masshousing.com. And then our website as well, masshousing.com, has all of the information that I just covered and then some that you can look at your own convenience. And I don't know if we have questions. Denisha, maybe you've been keeping up, but I will take a look.
I don't think I saw any specific to you. I actually just asked them again if they had any questions for you specifically.
All right.
Yes, you guys will have a copy of the presentations from tonight. So someone just asked that in the chat. I know it feels like a lot of information for you guys. I hear it all the time, so I know it. But for you guys, I'm sure it feels like, oh my God. Don't worry. One, you'll have the replay so you can pause it and take notes. You'll have the presentation so you can read through it. But more importantly, you're paying attention to the income limits and making sure, like I said, 640 credit score. Do you qualify for those things? After that, it's going to be a conversation with a loan officer, right? But we want to make sure you're aware of these programs because not all loan officers offer all of these products, right? It is possible that you speak to a lender who may offer mass housing but does not offer mass housing partnership or the one mortgage, or they may not offer either one of those, right? And since we've learned that both of those programs have their own down payment assistance programs, if you select a lender who doesn't offer either one of these, you're missing out on all of that money, right? So what I want you guys to gather today is, okay, am I eligible potentially for these programs? Yes. If I am, then that means I know of all of the lenders I'm interviewing, because I never want you just to pick someone that a friend gave you, interview everyone, right? Once you interview them and you figure out what they have, now you can select, okay, who has the one mortgage? Who has mass housing? Does this work for me? Does this work for my situation? So I want you guys to ask deeper questions when you're starting your process and not just going off of, my cousin said this lender was great. That's awesome. That means they're going to give you great customer service, but are you also going to get $30,000 in down payment assistance or no? Right? These are questions you need to start asking. So I just want you guys to be aware of that, okay? I'm going to look through and see if there are any new questions for you.
There were a
Someone asked, is it
couple.
2 years of continuous employment that they need to have? What happens if they had a gap in employment?
It depends what the gap is, but the lenders that you work with will guide you through that. You may just need a explanation letter, but again, it depends how long that gap is. It's a bit of a loaded question, but
It is.
for the most part, it's a 2 years continuous employment.
Yes, and I will say different lenders have their own overlays or additional requirements. So some lenders may accept a 1 month, a 30-day gap. Some may accept a 2 month gap, right? So that's where it starts to be, we're speaking to specific lenders to see who's a little bit more flexible based on your situation.
Yeah. There was a question about, is there a limit on how much you can stack in down payment assistance? And Shahara, there's no limit, quite honestly. The lenders that you work with will help guide you as to, what you be able to do. It just gets a little bit more complicated to manage different programs that you're trying to stack because you also have to meet the eligibility for each program independently. So you meet mass housing, if you meet stash, if you meet the city of whatever, right? Each of them will have their own limits and their own guide requirements. So you just have to meet those. But I mean, Denisha can share that we've had
Yeah.
people, get up to $100,000 in down payment assistance to purchase a home by stacking different programs.
Yeah. The rules changed after this one. The most that we've seen is a young lady got over $200,000. We stacked, I think, 6 programs for her, where it all worked. She fit the guidelines for all of them, where she was able to get over 200,000 in down payment assistance. So yes, you can stack as much as is allowed. We will try to help you figure those out and stack all of them, but just understand programs are ever changing. So I tell people with love but sternness, this is not the time to YOLO and live your best life and all the things. This is where you make sacrifices, you make compromises. If you know you're not exactly in position, you have to focus because as these programs change, it becomes more difficult for you to qualify because they run out of funds, right? If
Mhm.
it's all based on first come, first serve, but you're taking a little bit longer, we don't want you to miss out on these opportunities. So this is part of tonight is so that you guys see there's money out there, right? But you need to lock in and you need to focus so that you can benefit from these programs because they have changed. City of Boston will be presenting shortly. They went from 5% down payment assistance. Now they're down to 2% or up to 2%, right? So programs are changing all the time. I want you guys to be ready for whatever it looks like when you're ready to buy. Okay.
There's a
Um,
couple of questions on lenders. Denisha, what do you do if you're working with a lender, but the rep isn't responsive? One of the things that, and Denisha is a very, an advocate of this. Number one, you want to work with somebody that wants to work with you. And you're not married to a specific lender. So if you're feeling, because there's another question about feeling pressured, Rachel, if you're feeling pressured by a lender, then maybe that's not the lender that you should be working with. So no one should feel uncomfortable with trying to get a mortgage. Call somebody else. You can walk up, and I know that I have a lot of lender friends on the line, and I'm sorry, but you guys know
you gotta do your
if
job. You
if
can't help
it's
it.
not if it's not a right fit, it's not a right fit, and you just move on until you find the right fit. So yeah.
I'll make a note for you guys to send out. We have like a question, an interview question sheet or questionnaire for you guys that you can use to interview lenders. And one of those
Mhm,
questions you should ask them is what is their communication style? What is their response
mhm,
time? Because if you prefer text messages and phone calls, but they're always emailing you, but you check your email once a week, probably not going to work. Right. So
mhm.
you want to make sure you guys have the same communication style, the same time frame, and responsiveness. If you're like, I need you to respond same day, you need a lender who can do that. If they can't, I believe in being honest with people. If I don't respond today, I will get back to you by tomorrow. So give me 24 hours, full 24 hours to get back to you. I think that's fair, right? Because they may be busy. So it's okay to have those conversations with your lenders, with your loan officers. Am I a fan of firing them right away? No, because you never know what's happening. I let them know, hey, I expect you to respond within this time frame. If you are unable to do that, please let me know if there's someone else that can help me, or I will be looking into other lenders. Be honest, be transparent. Let them decide if they fired themselves or not, right?
Yeah,
Because if you
exactly.
gave them what the expectation is and they still don't meet it, don't feel guilty. It's business.
Exactly. Last question, and only because we're pressed for time. The down payment assistance money is borrow or give it. And there's two types of down payment assistance. One is a grant where
Mhm.
it could be forgiven, where you don't have to pay it back. And there could be a limitation. Maybe you have to live in the house for 5 years or 7 years or 10 years, right? So that's a grant that you don't have to pay back. And then you have down payment assistance programs that are loans that you do have to pay back at some point, whether they're deferred, that you don't make monthly payments right away, or whether you actually make monthly payments like ours are. So make sure that you understand what the difference between a grant is and a loan is so that you know exactly what it is. But with that, to the next presenter.